Hi everyone, welcome to Financial Management Theory Bytes, and the topic for this video is debt securitization. But before we start this topic, I request all of you to please hit the like button, and if you have not yet subscribed to the channel, please subscribe to the channel and share with all your friends because you are going to get some quality content on this channel. Already there is lots and lots of content, and in the coming days also you are going to get lots and lots of content relating to your preparation for CA Intermediate, CMA Intermediate, Financial Management and Cost Accounting. So please stay tuned. Okay, let's come to this debt securitization. That what is debt securitization? I'll explain it with a very simple example. Let's say there is a company that is ABC Limited, right? And this company is in the business of giving the housing loans, right? This company is in the business of giving the housing loans. Now, this company has given crores of housing loans. Let's say this company has given the housing loans to many people, A, B, C, D, and so on. So many people they have given the money, housing loan. Now, at one point of time, what happens is this company runs out of money for giving further loans. Now they have given to A, B, C, D, E, F, G, H, they have given already given, but to give further loans, they run out of money. Now, what will they do? Here comes into picture another party that let's say that is Y Limited, right? What they will do is this ABC Limited will sell all their housing loans, will pool their housing loans, pool and sell housing loans to this Y Limited, right? What will Y Limited do? Now, while if they are going to sell this, Y Limited will give the money, will pay, right? Will pay to ABC Limited against the housing loans purchased. This Y Limited is known as what? This Y Limited is known as Special Purpose Vehicle. This is known as Special Purpose Vehicle, which is known as SPV. Special Purpose Vehicle, which is SPV. Right? Now, what this Y Limited will do, further next step, what Y Limited will do, Y Limited will convert all these housing loans, will convert all these housing loans into marketable securities. They will convert these into marketable securities, and they will issue these securities in the market. Let's say they have issued these securities to Mr. G. Let's say there is a person who purchased all these securities, Mr. G. He is the person who is buying these marketable securities. So what Y Limited did is, it's a special purpose vehicle. Special purpose vehicle means that they are specialized in this, that they buy the housing loans from the companies who run out of money. They convert those housing loans into marketable securities and they issue it in the market, right? Now, what is the benefit to all? Firstly, ABC Limited. What is the benefit to ABC Limited? ABC Limited received the money which they wanted for giving further housing loans. Received money for further housing loans. Right? Now, just think about it. Mr. G purchased the securities, isn't it? Mr. G purchased the securities. Now, Mr. G will expect return on these securities. Expect return on investment. Yes or no? Mr. G says, I have invested in the marketable security, so I am expecting a return on that. Y Limited says, okay, we will give you the return. But how will the Y Limited give the return? From the Y Limited will give the return from the interest and the principal being received from this A, B, C and D. This A, B, C, D will be paying interest plus the principal amount. From this amount, they will pay this return to Mr. G. Now, what is the benefit to Y Limited? Y Limited received money by issuing securities. Received money by issuing securities. By issuing securities. And what is the benefit to G? Mr. G received this return on its investment. So this is the whole process of debt securitization, that is a debt being converted into the securities and being issued. The return to Mr. G will be paid from the interest and the principal being paid by the original takers of the housing loans A, B, C and D. They took the housing loan, they will be paying interest on that, they will be paying the principal amount. Out of that they will give the return to Mr. G. Mr. Y will get the money by issuing the marketable securities. So everyone is benefited, everyone got their money, no one is at loss. This is the process of debt securitization. I hope this is absolutely clear. You can note down in the books, you can pause the video, note down in your books, and let's read it from here. So debt securitization is what? It's a financial process where a bank or a company pulls together the loans like the home loans, car loan or credit card debt and sell them as securities to the investors. The key player here is the special purpose vehicle, that is SPV. In our example, it is Y Limited. So SPV is a separate legal entity created just for this process. The bank transfer the pooled loans to the SPV. This ABC Limited can be a bank, right? This is referred to as the bank in the example. So they will pool their resources and give it to SPV. The SPV then issues the securities like the bonds backed by these loans and sell them to the investors. The investors get paid from the repayments made by the original borrowers, from where the return is being given to Mr. G, from this return from A, B, C and D, right? So this is what is there. Imagine a bank has given out hundreds of home loans. Instead of waiting years for all the borrowers to repay, the bank wants the cash now because they're running out of cash. The bank creates an SPV, transfer all the home loans to it. The SPV bundles the loan and sell the bonds to the investors. The bank gets the cash from the SPV, which got it from the investor. Investor gets regular payment from the interest and the principal paid by the homeowners. If some homeowners don't pay, the risk is with the SPV and the investors and not with the bank. So this is a detailed process of debt securitization. Is that everyone clear with this? I hope everyone is clear with this. So this is a whole thing regarding the debt securitization, right? So stay tuned for the further videos because we'll be coming up with very, very important theory topics, because theory is equally important in our examinations. So we will be posting these small videos on the theory so that you can anytime understand it, remember one concept in one video. That's going to be easy for you guys, right? So stay tuned for the next video. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.